All right. Hey guys, happy Sunday to you. We are going to take a look at gold and silver through the lens of Elliott wave. And we are going to start with the silver chart. And this is an 8-hour chart. So we're zoomed out looking at the overall structure on the 8-hour. You can see the last couple of months, silver has been coming up quite a bit. And more recently, if you were inside of the Professor Trades Club, you would have known I was talking about this squeeze setup right here on the bottom panel. And sure enough, the squeeze did fire to the long side, producing a wonderful gain. And now price has made a new high, right? And then it's getting rejected rather convincingly. And the way we're thinking about this from an LA wave perspective is the clues are the structure of price. And off of this low right here, which you could argue this is 5 down, you could also argue that it's just 3 down. This did not come down far enough to really make it convincing to be a legit 5 down. But whether it's 5 down or 3 down, it did catch this zone right here, which is a trick we learned from Armando's club. I'm talking about the Professor Trades Club. See all these wicks down here? Oftentimes price comes back to those zones when there's wicks, especially on a longer time frame chart like an 8-hour chart. So you can see how many times, 1, 2, 3, 4, say 4 times price has come back and just wicked into this zone, which I put on there. And price did make a new high, but now it's coming down rather convincingly. I mean, that's a lot of red 8-hour candles. And so we'll take a look at the nano, meaning we'll drill down onto a lower time frame. But since we're looking at this right here, you can clearly see that this is 1, 2, meaning it didn't make a newer low. So just call that a wave 2. This really does look like a third wave. And then now we got rejected just after making a new high, and now we're coming back down. So call this 3 up so far. And as you know, if you've been following Elliott wave for any length of time, you know that one of the keys to identifying what we call a standard impulse is if wave 4 does not encroach upon the wave price territory of the top of wave 1, which in this example is going to be 48.99. Just call it 49. 49 even. If this is going to catch support right somewhere in this zone, which at the moment I would call this 3 down, just eyeballing it, right? You can see that first move down, a second move up, a third move down. So if we currently stay above that last week's low, and if price comes back up from here and makes a new high, you are very much convincing me that this is the bottom, and we are going to make a new high in what I would call wave 5 of 5. And then there's going to be a brutal retrace, I think. Well, it depends, but we'll get to that later. But for right now, the main clue is price going to break this level at 49, causing overlap, which means a standard impulse is off the table. And it also opens the door for this to not be the low. And honestly, the next obvious level of support is way down here in the low 40s. But we don't need to get all into that right now. Actually, this is the next support. Excuse me, mid 40s. But if this craps out, then the next major level of support is all the way down here in the low 40s. But we're going to drill down in the lower time frame to get a few more clues. But for right now, let me just tidy up this blue box, which is a kind of a standard box for where you would want to see a wave 4 hold support. But we're already leaking out of the bottom of that box. So you can see that this wave 4, if it needs to, if it rattles around a little bit lower and does not create any overlap and then forms a small impulse, meaning a 5-wave move that does not have any overlap, If that comes up out of this box with a 5-wave structure, that's going to be supportive of the idea that this is a 1, 2, 3, 4, and then if we get a nano 5-wave move up, we could be beginning wave 1 of 5, to come up and make a new high. So I don't have that bias in mind. So let's look at the lower time frame in silver futures, and let me make this a little easier for you to see. So this nano chart really shows you what I'm talking about when I say if price comes down and makes a new low, especially if it makes it down into this zone, that is a much more convincing 5 waves down. And if so, that's going to kill the idea of this being the bottom of wave 4, meaning if price makes it all the way down to here, then it's much more likely, yeah, you're going to be looking for a bounce from this zone, but much more likely you're going to see price come down and test these lower levels down here at, just call it the mid 40s. Okay, so, but from a purely Elliott wave perspective, the reason we like Elliott wave is because of the clues that it provides based on the structure of price. So right now, we just have 3 waves down. So let's see what happens tonight overnight in the Sunday session. If price makes it down into this zone right here, that's going to go a long way to supporting the idea that whatever bounce happens after that, you're still going to get one more shove lower, make a new low below there. And then this is somewhere down here in the mid 40s will be the next area. So I got to say, this is really still looking like it wants to come down. I mean, it got rejected from this box that I put on the chart on Friday, and it's coming down rather convincingly. So this has every chance. I'm not predicting anything, but if this area holds and doesn't make a new low and you get the 5-wave impulse higher, then on the pullback from there, I'll be buying it. But I don't think that's what's going to happen. I mean, this can rattle around a bit in here, but as long as it stays below this zone called Elliott wave pivot, then the odds are still that the price is going to come down. If price cannot get above this Elliott wave pivot, it's much more likely the price is going to come down into this green box right here. If that's it. So that's the deal. Now we're going to take a look at gold, which is rather similar with the exception of, let me show you something. So in silver, I'm considering this the A wave, 5 down for an A wave, 3 up for a B wave, and then the final C wave. Actually, let's adjust the measurement for a potential C wave target, okay? So I can get a little bit more specific. So there's the bottom of the A wave, and then I'm going to move this click to the top of the previous swing high. And I'm not going to get it exactly there, but that's close enough. So guess what? Isn't that interesting? The zone that I drew on here using Armando's technique of just, put a zone where the wicks are in the past and see if price, if price does come back down to this area, you would expect it to at least bounce from here, but unlikely that it would just slice right through that. But if we're looking for a C wave down, these yellow fibs are in play. Just call it 44.20 to 46. I know that's a big zone, right? That's like a $1.80 zone, but we'll dial it in. We'll get more clues. But this is an 8-hour chart, just showing you 46 on the 8-hour chart. And if you go back to this 34-minute chart, my arrow just happens to be pointing to the zone that's down here just below 46. So these different charts are corroborating about a target area if price is going to make a new low overnight and into Monday session. So, but the interesting thing I wanted to show you is that on the silver chart, this B wave actually made a new high. But the reason we're not getting so terribly excited, ooh, silver made a new high, so I'm going to go long up here. Well, first of all, no, because of where we're perceiving this to be 3 waves up. After wave 3, you're expecting a pullback, which I was, even though it poked a little bit higher than I was expecting. It did get the pullback. roughly from where I was looking for it. So even though this made a new high, at the moment, I'll be thinking of that as a B wave. So this first move down is the A. B waves can make a new high. Yes, can make a new high. Doesn't necessarily mean I'm just going to go all in, because typically after a pullback of a three-wave move, I would consider that either a wave 4. It has to hold above this wave 1 at 49. If it breaks 49, all that does is shift the odds to seeing 46 or lower. It doesn't mean it's just going to happen. So I'm not saying if it breaks there, just go short, because it could still bounce from here. But we're going to dial that in on the lower time frame later in the week inside of the Professor Trades Club. So just remember, this B wave right here made a new high, whereas in gold, this is my point of that sidebar, is in gold, it's more logical. It's following along in a more standard way, that this is an A wave and a three-wave move, which to me this looks more like a three-wave move as an A wave. And then you got the B wave bounce, which did not make a new high, but it's definitely in an acceptable zone for what you would think of as a B wave. And now it is possible, we still only have 3 down. Now this is much more similar to silver now. If we go down on the lower time frame in gold from the 8-hour to the 4-hour chart in gold, okay, the idea would be if gold is going to make it down here to 3,600, which is really reasonable to think, or it doesn't have to go that low, but that's reasonable based on the overall structure, then this would be the beginnings of a C wave. So we already have 3 down in gold. It's bouncing right now. So the same rules apply. If this little bounce isn't going to come up and get above what we're counting as into the price territory of wave 1, which is going to be roughly 41.50. Okay, if it doesn't come up and get above 41.50, which is another 60 points above where it is now, 66 points above where it is now, then the odds are this will finish off a 5-wave move, and we'll consider that to be wave 1 of C. So, you know, imagine if gold comes down into this, make a 5-wave move down, then it'll bounce in 3 waves, and we'll look to short that for the wave 3 of C, which is really the most powerful wave in a standard impulse. And so even though we're thinking of gold as just being in a correction, it can still be an impulse to the downside in a C wave. And I didn't label this. I'm not really focused on which degree I'm in right now, but just for the sake of keeping track of a 3-wave move, A, B, C. Something like that. And the beautiful thing about Elliott wave, one of the additional beautiful things about Elliott wave, is if once you get the move down and it completes in a small degree 5-wave move down, and if we get a 3-wave bounce, wherever that rejection happens from, which typically it's 50%, 618, somewhere in there, we know where to look for the rejection. And we also know if it's moving up in a 3-wave move, I know how to measure for that. So we'll look for a zone. We'll provide a zone for rejection probably on Monday afternoon or Tuesday. And then we can take measurements. This is what I like about Elliott wave. We'll use the Fibonacci projection tool to dial in a more exacting target. But on the larger degree of this A swing low, B swing high, that's all we need is a swing low and a swing high to get an Elliott wave projection. So not unusual to look for gold in this example, in this context, to come down to say 3,600 somewhere, but we'll dial it in a little more exactingly later in the week. And I'll probably drop down, because this is a 4-hour gold chart, I'll probably drop down to 55-minute chart, or my favorite 34-minute chart, similar to silver. Okay, so that's the deal. Hopefully you learned a little something about Elliott wave, measuring 3 waves. Hopefully you learned that in Elliott wave you can have a B wave that makes a new high. Doesn't mean, oh my gosh, it made a new high, let's go, because it's the context of everything. And in my mind, this is still arguable that it's kind of a muted 5-wave move down. And when you see a 5-wave move down followed by a 3-wave move, the idea is that it's going to continue lower. The only reason that now it's a little bit more complicated is because it did make a new high, but it made that new high in 3 waves only. And if it made the high in 3 waves only, then this must hold support somewhere in this region if we're going to get another move up, okay, to be bullish. So I don't really want to be shorting, I don't really want to be going long right here. I think the odds are that it's going to come lower, okay? And here's your 46 right here. Anyway, so educationally speaking, there's a lot to consider with Elliott wave, but the more you learn about these things, including how to take these measurements, you're going to get better over time. You're going to have a greater understanding of context from which to view the market. That's the real gift of Elliott wave. Yes, it's complicated. Yes, it's hard to learn it. You're not going to learn it in a weekend. You're not going to learn it in a month. It took me, honestly, I was on it every day for like a period of years, like maybe 2 years, and it was back during COVID. Now I have enough of an understanding of it that I can really dial in my risk management much better. And really, that's the game of trading, isn't it? Is risk management. So hopefully you've learned some things here, at least 2 things, maybe 3, regarding Elliott wave. And ask questions in the comment section. And by the way, if you're looking for guidance in your trading and you want to improve your risk management, join the Professor Trades Club. It's a no-brainer at the price. The link for it is in the description of this video. And I'm back to posting every week, every Sunday. I like to focus on metals, but I'm always showing you and kind of trying to explain Elliott wave and how to make these measurements for your benefit. Okay, but if you have questions in particular, drop them in the comment section of this video. Be sure to check out the description of this video to get the link to the Professor Trades Club, where you're going to get an amazing education in a very short period of time. And then you keep learning Elliott wave. I'm in there every day posting charts. So you will pick up and increase your education and improve your risk management and improve your overall profitability. All right, thank you for watching. Give me a like if you're getting value. Please smash the like. Certainly subscribe so you'll know anytime I drop a video. And I look forward to seeing you inside of the Professor Trades Club. All right, thanks for watching. Take care. Bye-bye.